Are you invested in the stock market? Then you know what kind of year it's been. I mean, it's been practically red all year round. Year to date, the Dow is down over 4%. The S&P 500 is down over 7%. And the NASDAQ is down over 11%. That's not even to mention that the Fed is expecting to raise rates. And we have inflation accelerating at the fastest rate in over 40 years. Now, is this the time to panic? Hold on.
Wait a minute. Something ain't right.
Take a second, take a breather. Because while things look a little shaky right now, what if I told you that there's a sector inside of the stock market that can protect you and actually help you make money in times of economic downturn?
Guys, we got an all-time high on the S&P again. Consumer staples, utilities, those are all classic defensive sectors that are doing better.
Consumer staples is about inflation.
In those circumstances, consumer staples are a good place to be.
What's up, everyone? It's your boy Noble Living, and welcome to another Ticker Tuesday. One of the reasons why I love the stock market is because if you're paying attention, you can position yourself to make money at any time. Yes, even during a recession. See, I don't want to scare anyone because I'm not here to predict if a recession is coming or not. Just because the markets have been getting beaten up a little bit, we've been seeing some volatility, I'm not here to predict if we're headed to a recession. But what I can say is that preparation can help you no matter if we're headed in a recession or a depression, okay? One of the ways that you can grow your money in uncertain times is by investing in the consumer staples sector. The consumer staples sector is what I like to call the recession-proof sector. Why? Because no matter what is going on in the economy or in the world, there are certain things that people are going to spend their money on, okay? The consumer staples sector is home to companies that provide essential products used by consumers. So think of items like food, drinks, household items, toilet paper, even your alcohol and tobacco. So simply put, these are products that no matter what is going on, this is the last thing that people are going to stop spending money on. They're going to cut everything else out of their budget before they cut out these items. Because of that, consumer staples are considered non-cyclical. I think that should be our stock vocab word of the week. Non-cyclical. If a product is non-cyclical, that means that there's always a demand for it 365 days out of the year, 24/7. No matter how well the economy is or is not doing, people are gonna buy this product. There's always a demand for it, so that makes it non-cyclical, okay? That's why I love the consumer staples sector, and that's why I call it recession-proof. I wanna give you a few benefits for investing in the consumer staples sector. I alluded to the first one earlier, but it's a safe haven for when companies and stocks and the markets are free falling, okay? When the other markets are getting hit really hard, the consumer staples sector will always probably get hit a little bit less, or if not even any at all, because the companies in there are essential, so they tend to make money no matter what time. And because of that, there's overall less volatility. And if you don't like your investments going up and down and you don't like seeing your portfolio fluctuate, because there's some of us who like to invest like that, guess what? That's fine. These are the companies that you want to invest in the consumer staples sector. And a rule of thumb in the markets, typically the companies that are less volatile tend to pay dividends. So if you like dividend payments, you know I love dividend payments because that's the way that you earn passive income inside of the stock market, then guess what? The consumer staples sector is full of companies just like this. As always, I'm going to give you 3 stocks that you can start researching and that you can check out when you want to get started investing in the consumer staples sector. But here's my disclaimer. My favorite company inside of the consumer staples sector, and truthfully, really one of my favorite companies in the entire world, in the entire stock market, my everyday shopping, is Costco, okay? I love this company. I love them. I'm not biased because they're just a really well-run company. If you don't believe me, look at their stock chart and get a membership and go shop there. I don't get paid for them, but I wish I did. But, you know, Costco is my favorite consumer staples stock. But the thing is, they're trading at over $500 a share. So I could recommend them to you all. I do recommend them. But if you're looking for a few cheaper options, here are a few that you could get started with. Walmart, ticker WMT. Is there really a brick and mortar store that's been coming like Walmart? I mean, really? Come on now, this is a company that has over 2 million employees, 11,000 stores worldwide in over 26 different countries, okay? And they're still trying to grow, right? I love that. But this is the thing. Walmart has been a little underwhelming of lately. They're trading on the low side of their 52-week low. But that's exactly why I love them, okay? Because they have a beta of about 0.86. And for my stock market beginners, this really should be a vocab word too. Beta, all you need to know is a beta lower than 1 is an indicator that a stock is less risky. So because their beta is under 1, I like that. That means that they're less risky. Their net sales in 2021 grew from 2022. And their e-commerce business grew from 40 billion to 75 billion in 2021. All right? That's what I like to see, because they're still trying to make it go at a company such as Amazon, okay? They've also made over 20 acquisitions and 15 investments totaling over $20 billion. So this is a company that, even though they're massive in size, and I think that we've all known about them for years under the industry leader, which I love, they check all those boxes. Guess what? They're still innovating, finding new ways to grow, and the numbers are actually representing where they're trying to grow. So Walmart's a company that I'm continuing to watch, and I'm continuing to buy at cheaper prices. The next stock I like in this sector is Tyson Foods, ticker TSN. That's right, the chicken brand that we all used to eat when we were kids.
To be honest, I don't want
Tyson chicken nuggets. They're crispy on the outside, juicy on the inside.
Thanks, Mom!
Have you seen chicken prices lately? Yeah, well, Tyson has too. And Tyson recently just announced their earnings, and in that call, they performed extremely well in an inflationary environment. Why? Because they passed on the increased chicken prices to us, the consumers. Despite this, revenue was up over 21% in the past since pre-pandemic levels, okay? And most notably, the company has increased their cash by 18% and decreased their total debt by 6%. These are strong financial numbers that I like to see, and that tells me that Tyson is using the inflationary environment to their advantage. They're using the money smartly and trying to expand their other business, because they don't only just have chicken, they have pork, they have other areas as well, okay? I love Tyson. They're also doing share buybacks, so that tells me that management loves what they're doing internally and betting on their stock as well. You know I'm coming with the third stock. It has to be an ETF, ticker XLP, Consumer Staples Select Spider Fund, okay? This ETF holds some of the 10 best names. I mean, it holds a lot of names, but the top 10, the top 9 is fire, okay? Proctor and Gamble, everybody knows a ton of the products that Procter and Gamble makes, okay? That's their largest holding. And I did a previous ticker on some of the products that Procter and Gamble has made, so check that out right there, okay? Coke and Pepsi is their second and third largest holding. We know everybody loves the beverage companies, Coke and Pepsi. They basically have a monopoly between the two of them on every beverage in the entire game, okay? Fourth and fifth largest holders of this ETF is Walmart and Costco. You already heard me say a little bit about them. So you get the benefit of owning Costco at a cheaper price here. 6, 7, 8, Phillip Morris, Mondelez, and Altria. All of these tobacco and alcohol products. So you know what? You get the addictive products that people are going to spend money on anyway, so you get to benefit off of that. Number 9, Estee Lauder. Can't go wrong, okay? With a beta of 0.6, this is literally the perfect low-risk stock that you want to have in your portfolio, literally at all times. This stock alone can help benefit you in times of economic downturn just by it running itself. But even when times like if the staple sector is taking a fallback, the beta is low to help keep your portfolio nice and balanced, okay? I love this ETF, and it's definitely one of my go-tos. When there's uncertainty in the markets, companies that can be consistent in their numbers is attractive and what you really want to see. Due to the consistent, predictable nature of the consumer staple sector, investors such as you and I assumptively can predict things such as a company's bottom line or their revenue. And if you want defensive, this is the sector for you to get started investing in, okay? So if you want to get started in the markets and you don't want to lose a lot of money, you're a little pessimistic, this is where you want to get started, okay? Consumer staples sector, check it out, all right? I'd love to hear some about the stocks that you're interested in or some of the things that you would spend money on at no cost, right? No matter what's going on in the world, if you're going to spend money on it, what would it be? And invest in the companies that create that. I'd love to hear more about the things that you can't live without. So that way we can figure out what the companies that make them so we can invest in them. All right, guys, happy Chica Tuesday. I'll see you guys next week, and check out the YouTube as well, as we're starting to drop more content and more videos. Appreciate you guys.